Welcome back to the Cryptocurrently podcast. I'm your host, Pete Dobson. Good news, everyone! There's bad news in the market. That's great. We've got, did you see what happened? You may have missed it, but over the weekend, some muckety-muck in South Korea came out and said that there is legislation coming that's going to ban any sort of trading on cryptocurrencies in South Korea. All right. And then the news came out. And the news was, oh no, that was false. That wasn't real. Fake news. Okay? The guy said something that wasn't real. It was fake. But it was news and it affected the markets. See how that works? So now we have a situation in the market where people are coming to their senses and realizing like, oh, that wasn't true. I told this story before, and I'm going to tell it in longer form on one of the Sunday morning story time shows. But fake news can move markets, and you can even bet on it. There was two guys in, I want to say Georgia. They were brothers. This was in the 80s, and they bought a whole bunch of positions in gold. And then, as commodity traders, they used their influence to spread a rumor clear around the planet that President Reagan was dead. And the price of gold skyrocketed, because anytime there's a change of the guard, destabilizes the dollar and people move their money into precious metals, typically. And they did that, they bet on it, they spread the fake news, and they cashed out. And they did it all within the space of one day. And that's the power of fake news. Okay, you can manipulate markets with it. You can, now I'm sure this guy, when he said whatever it was that he said, he probably believed that it was true for whatever reason. We don't know. But the point is that it's news. News moves markets, all right? And now that news is over. The truth is out, and the market is taking a big, deep breath and realizing like, oh, that was all fake, okay? You're hearing, if you've been watching the news or reading articles or anything like that, you've seen all these people. There's big shots, whales that are coming out, banking guys, coming out and saying like, oh, this is all garbage and you need to not be doing this and whatever. And even guys like Warren Buffett coming out and saying some very negative things. And then there's other whales that are coming out and saying, no, I'm going to push this thing as far as it can go. You're a fool if you're not in it. Okay, so I guess you need to ask yourself a question is, do you think the internet's going to go away? Do you think the need to more efficiently transfer information is going to go away? The blockchain, is that we're just going to stop? Is that going to end? Well, you're going to have to answer that question in your own soul. Let me give you a quick story, true story, about Mr. Buffett. Okay, now again, I'm not saying anything bad about Warren Buffett. If you go buy his books and do exactly as they tell you to do, you will get the same results that Warren Buffett gets. Because his whole thing is he's an investor. His approach is methodical. He knows how to pick them, and there's a method, and he tells you what that method is. That's the cool thing about wealth, is that the more other people become wealthy, the more we all get wealthy. Okay? That's why, I had somebody ask me, why is it that, on my tiny little YouTube channel and my tiny little podcast, why am I recommending other people with their shows and the things that they write or podcast? Why would I do that? Well, the answer is because I don't think like a poor person. That's why. If other people are being successful, that tells me that I too can be successful. If they can do it, they're not better than me, they're not smarter than me, and they're not stronger than me. And because of my work ethic, I bring one thing to the table, and that is I will not let anybody work harder than me. Nobody's, at the end of today, as far as it's in my own control, I will not go put my head on my pillow tonight and think, oh man, I let that guy work harder than me. That's not going to happen. Hard work pays. And so the same thing, I'm sorry, I kind of went off on a tangent there, but Warren Buffett, like he will tell you how to be successful, because the more success you get, the more success he gets. That's how it works. That's how wealth works. We can all get what we're looking for here, but just I digress. Let me go back to what I was saying here. Back to Warren Buffett. Now, Warren Buffett, the wise oracle that he is, has said some disparaging things about cryptocurrencies, and what he's saying, it's correct. All right, he's not wrong. So then let me illustrate that with another story of Warren Buffett. The last time we had a bubble in the marketplace, this was starting right around towards the end of 1997, and then that bubble popped right around 2002. What had happened is the bubble was in the tech sector, right? There were people trying to get in on what are called IPOs, initial public offerings, on all these different tech companies, and things were just, as soon as they made it to the market, man, they just skyrocketed, and people were making millions of dollars, hand over fist. And then Warren Buffett and Alan Greenspan came out and they rebuked the nation and said, you people don't know what you're doing, and this is going to be bad for everybody. And guess what? They were right. The tech bubble popped, and a lot of people lost their money and their minds. Okay? Let's just take one example of one of those crazy stocks that Warren Buffett was right about. A little company called Amazon.com. You may have heard of it. All right? 1997, in May of 1997, you could have bought a share of Amazon.com for $1.50. All right? And as that company grew and grew, that stock had a value of $2.50. But guess what? If you wanted to buy that $2.50 stock, it would cost you $100. So that's what it was trading for on the market. There was so much irrational exuberance in the marketplace that $2.50 stock, you could only get it for $100. All right? And then Alan Greenspan and Warren Buffett came out and said the things that they said, and everybody came to their senses, and the value, or the price of that stock on Amazon.com went down to its actual value. It was under $5. I can't remember exactly what it was, but it went from 100 down to almost nothing. Okay, so Warren Buffett was correct. Now, there's another point in this. Had you bought in at $100, right? If you said, "Oh man, it's $100 and this thing's just going to go up and up and up, and you know, technology, it's going to keep expanding. I'm going to make all this money," you would have gone down. You would have lost nearly all of your money. But guess what? 20 years later, from 1997, right now, that Amazon stock is at its proper value and selling for what it's actually worth, and that worth is $992.58. Okay? So, was Mr. Buffett, was he right or was he wrong? Well, he was right. He was right. When it was trading at $100, it wasn't worth $100. But it's Amazon.com, right? Jeff Bezos was trying to sell books, and then he started branching off into other things, and now you can have your groceries delivered by those people, right? So, yeah, he was right, but also he was wrong. That's what I'm saying here in this market. There's volatility to be taken advantage of. And when Mr. Buffett speaks, he's right. You should not be coming into this market thinking, "Oh, I'm just going to buy this, and 20 years from now I'm going to sell it at 66,000 times what I bought it for." All right? Get in, take advantage of the volatility. If you can make 10% on your money in a week or two, that's huge. That is to the moon. Some of these people, these YouTubers, I'm hearing, and you probably all know who I'm talking about. It's a couple of kids. They got famous for building cars, and so when all this is over, they're going to have that to fall back on. They're going to be able to build cars, and they'll be just fine. But right now, they're talking about things that they just don't know about. They don't know. They don't know for a number of reasons, and I don't want to disparage young people or anything like that. Like, you need to find your creative core and work from that place. But there's a lot of people talking a lot of nonsense. All right. The idea that you're going to make 100 times what you put into it, that's unrealistic. It's so unrealistic that if anybody ever comes to you and tells you like, oh man, you can make 10%, not 10 times, but 10% on your money in the space of a week or two, that is to the moon. If you realize that in your portfolio, you've gone to the moon, 10%. And right now, these markets are rendering exactly that on a very consistent basis, right? You can get in, buy on the dips, wait a week, and see how many times have you gone on to, Coin Market Cap and seen, things are up 10%, 30%, 50%, 80% in a day, right? To the moon every day. And you can get in, make 10%, make 20%, cash out, find something else that's on a dip, buy that, wait for it to go up. Right now, there's $100 million on the sidelines. All right. That money should be coming back into the market probably after Wednesday. Well, technically after Thursday, but after this week, that money's most likely going to start trickling back into the market. And this last week of all bad news, well, what if you just had a week of good news, right? What if you just had a week? What if you bought something and then a fake story, forget the real story, but what if a fake story came out? Oh, Mark Zuckerberg's going to buy, such and such a coin. And that news gets out into the ether and everybody starts buying that stock based on that news. Well, you cash out, you know what I mean? Or God forbid, if it's actually real news and the damn thing just goes right up, to Mars, even better. But what I'm saying is that there's volatility in this market. There is irrational exuberance in this market. When Warren Buffett speaks, he's correct. That doesn't negate the fact that you can make money on it if you don't get greedy and stupid. All right? Look for 10% gains or 20% gains or whatever. Don't be looking for something. Don't be looking to put $100 into the market and cash out at $1 million. All right? That can happen, but the odds of you being on it is probably similar to winning the Powerball. You know what I mean? Like, yeah, you can win, but anyways. So that's the podcast today. I just wanted to talk a little bit about the importance of fake news. Right? Korean guy comes out, says some BS, turns out not to be true, and then it's a wash. Warren Buffett says some things, people get a little discouraged, and he's right. But as we learned in the Amazon example, let me just ask you this though: like, have you ever bought anything on Amazon? Right? Do you regularly buy things on Amazon.com? Because if you do, you need to stop doing that. Here's what you do: you go on to archadvocate.com. That's arch-advocate.com. That's my website. Go on to the top left and you'll see an Amazon banner there. And if you click on that banner, it redirects you to Amazon.com. And if you do whatever shopping you were normally going to do, it's the same price. Everything's the same. It's Amazon.com. But what they do is they give me a little bit of a kickback for your purchases. Now, here's where it gets awesome. Now, obviously, I'm a very famous YouTuber and podcaster, right? All you got to do to be famous is get a podcast and a YouTube, and I've proven that theory. If you buy on Amazon.com by going to my website, clicking on the Amazon banner, and getting redirected to their website, and write in and tell me what you bought, and email me the confirmation number, I will read your email on the podcast and on the YouTube show, making you famous in front of all your friends. That's how it works, folks. Fame. Spread that stuff everywhere. All right, that's it for the podcast today. I'm going to do another YouTube show here in just a little bit where I dive into actual picks and actual strategies. But that's it for now. We'll talk to you next time.